Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to see what is really going on beneath the surface. Today we are diving into a report that might seem a bit dry on the surface, but trust me, it holds a little surprise. Get ready because we're looking at SmartStop Self-Storage REIT Incorporated's latest update. And it is all about the cheddar, folks. Before we get into the nitty-gritty, if you dig these kinds of straightforward financial breakdowns, please hit that subscribe button. And for more exclusive insights and to chat with our community, join our Discord server, the link is in the description below. Alright, so what we've got here is a Form 8K filing from SmartStop Self-Storage REIT Incorporated. Think of this as a quick update, like a special bulletin from the company to investors. The main reason for this filing is a straightforward announcement about their dividend. It is not a full-blown financial report like a 10Q or 10K, but it gives us a peek into how they are thinking about sharing profits with their shareholders. The date we are looking at is the 23rd of December 2025. This filing is about an event that happened on or around this date, which for us means it is giving us a very current snapshot of what the company is doing. The company itself is SmartStop Self-Storage REIT Incorporated. As the name suggests, they are in the business of self-storage. For those unfamiliar with REITs, that is Real Estate Investment Trust. Essentially, they own, operate, or finance income-generating real estate. In this case, it is self-storage facilities. Now, you might notice a checkbox here regarding emerging growth companies. SmartStop Self-Storage REIT Incorporated has indicated they are not an emerging growth company. This means they are not taking advantage of certain relaxed reporting rules that newer companies can use. They are playing in the big leagues for reporting. The main event, or rather the other event as it is called in this filing, is an announcement from their board of directors. They have officially declared a dividend. This is where things get interesting for investors who are looking for income from their investments. So, on the 22nd of December 2025, the board decided on a dividend. This dividend is for the month of January 2026. What is particularly noteworthy is their target annualized dividend. They are aiming for a yearly dividend of $1.6 per share. This gives you an idea of their forward-looking dividend policy, not just a one-time payout. Let's break down the specifics of this particular dividend payment. The record date is the 30th of January 2026. This means if you own shares in SmartStop Storage REIT Incorporated on this date, you are eligible to receive this dividend. The payment date when the money actually hits your account is the 13th of February. 2026, for each share of common stock, the dividend payout is about $0.14. If you do the math, 0.13589. $0.41 multiplied by 12 months does indeed get you very close to that $1.6 annualized target. It shows a consistent approach to returning value to shareholders month after month. The signing off on this report is James R. Barry, who holds the important titles of Chief Financial Officer and Treasurer. This tells us that the financial leadership of the company is aware of and responsible for this dividend declaration. Now, looking at this from a broader perspective, what does this dividend announcement tell us about SmartStop Self-Storage REIT Incorporated? Firstly, it signifies confidence. Declaring a dividend, especially with an annualized target, suggests that the management believes the company is generating enough stable cash flow to consistently reward its investors. In the real estate world, particularly with REITs, consistent dividend payouts are a major draw for shareholders who are seeking steady income. The self-storage industry itself is quite interesting. It is often seen as resilient, performing reasonably well even during economic downturns because people downsize or store belongings when facing financial hardship. This can make REITs focused on storage like SmartStop a potentially attractive investment for those looking for stability. However, we must also consider the context. While this report is a positive indicator of their dividend policy, it doesn't give us a full financial picture. We would ideally want to see their revenue growth, occupancy rates, operating expenses, and debt levels to get a complete understanding of the company's health. A high dividend yield is only good if the company can sustain it and if its underlying business is strong. For example, if their occupancy rates were declining or their debt was soaring, a high dividend might be a red flag, a sign they are trying to keep investors happy while masking underlying problems. We need to ask ourselves, is this $1.6 annual dividend sustainable? Are they growing their portfolio or just paying out from existing operations? Without a more comprehensive financial filing like a 10Q, it is hard to say definitively, but the intention to pay is clear. Looking ahead, the self-storage market is competitive. SmartStop is up against many other players, from large national brands to smaller local operators. Their strategy to consistently offer a good dividend could be a key differentiator to attract and retain investors in this crowded space. The recorded and payment dates for February 2026 suggest they are laying the groundwork for ongoing distributions, which is a good sign for income-focused investors. So, to wrap up, SmartStop Storage REIT Incorporated is signaling a commitment to returning capital to its shareholders through dividends. The annualized target of $1.6 per S-share, with a specific payout scheduled for February 2026, is the key takeaway here. It is a positive move for investors seeking income. However, as always, it is crucial to look beyond just dividend announcements for a full picture. You would want to complement this with their more detailed financial reports to understand the revenue and profitability that's actually supporting these payouts. What are your thoughts on this dividend announcement from SmartStop? Do you think this strategy makes them a good investment, or are there bigger concerns we should be watching? Let me know your take in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe to Corporate Decoder for more regular insights into the world of finance and corporate filings. And don't forget to join our Discord community linked in the description for more in-depth discussions and to connect with fellow finance enthusiasts. Thanks for watching, and I'll see you in the next one.